Good evening, everyone. Welcome. Thanks for joining us. So, tonight we are delighted to welcome Leah Supple, who has been helping us. Well, Leah and I met back in the early 2000s, I think, or in that region, when she was a mentor for the Small Business Victoria, helping out with people and reviewing accounts. And she and I have been, yes, close cohorts since then. And she's been running her own business for the last, how long? 10 years, maybe, Leah?
I've been by myself for nearly 10 years, yes.
Yeah,
Yeah.
that's what I thought. And she's got a wonderful team behind her assisting with accounting. And we are delighted. She also is a part of the Bantax group, who are headed by Julia Hartman. And Julia specialises in research in property investing. But Leah and the other accountants actually pop it all into practice. So we're getting it right from the horse's mouth here tonight. And we're really excited by that, because it's really important to get the right information and know that you can reach people who you can trust and get some good advice from.
So thanks for joining us. The first disclaimer that I'll put here is one, obviously, from the Property Education Company, where everything that we're talking about is very general and doesn't apply to any one particular circumstance. Louise didn't want me to put this in because of all of her accolades, but I think everybody's joining tonight because Louise does have your best interests at heart. Hence, this is not a mortgage discussion, this is tax, but it's beneficial to all of her clients, and that's why we're here tonight. Louise did touch on that, yes, I'm part of the Bantax group, and Julia heads up, and we have an enormous amount of information on our website if you want to delve into anything. At the end of the conversation that we have tonight, I'll put some links in the chat box for sort of some more detailed information. But even if you are very happy with your own accountant, Julia also provides a service where you can ask Julia a specific question. You can pay specifically just for that little bit of advice on a property. And often we find that that's a really good, useful tip, because people's accountant know them intimately, but you might want to get a second opinion, and Julia does offer that service. So I would encourage you, if you don't think what you're being told is right, always get another opinion. We did talk about doing 10 tips, and my first thing is that there is no miracle to take away our tax unless you're actually not making any money. So that is probably the only way you avoid tax. If you are paying tax, it means that you've made some money. But it's worth just reviewing where our tax rates are and where they're going. So this year we had a decrease in our tax rates in the first two income brackets. So the 18 to 45 and 45 to 135 decreased in the 2025 year. 2026 is going to be identical to 2025, so there isn't anything that needs to change. But as you can see going forward, the government have proposed that we get a 1% reduction in 27 and a 1% reduction in 28. The reason I bring the tax rates up is that deductions are all around what your next dollar of tax that you're going to earn, or what that deduction does to your taxable income and ultimately your tax refund. So a misconception a lot of people have is that they have $1,000 worth of deductions, so they'll get $1,000 back. Unfortunately, that it doesn't work that way. It works on whatever tax rate you are in. That's what those deductions are worth. So everybody will find when they go to do their tax at the end of the year that their refunds are probably if there are refunds or payables, but refunds are probably going to be less than they have in the past, because our deductions, if our income is still the same, are worth a little bit less. So if I normally spend $1,000 on work-related items, and this tax bracket used to be 32 or 34 and a half, you'd get $340 back. Now you'll get $300 back. So just keep that in mind at tax time and managing those expectations. And what we're going to talk about going forward is, when do we want to put income or expenses in our tax return? Because when you change tax brackets year to year, if your income's going to be less in the following year, then of course we want to accelerate our deductions in the current year that we're in. We've got another 6 weeks left. But if our income is going to be less next year, then of course we might want to postpone selling a property or postpone getting a bonus from work, those types of things, depending on where we sit each year and what our tax rates are. So the first way to accelerate your deductions in a particular year are prepayments for your rental property. So things like council rates, insurance, body corporate, we can accelerate by paying them. Now, of course, there is, if you've got money in the bank that you're using, or if you're borrowing, the cost of interest, what that also does if you're accelerating some of these deductions. But of course, it might well be, I'll use a male or female going on maternity leave next year. You might have high income this year and you want to accelerate as many of these littler deductions as possible, but given you can only maximize the deduction for 12 months in advance. So body corporate's always one that we get caught out by, because they usually invoice you 6 months in advance, but sometimes you've already paid the 6 months, so you're only going to get another 6 months worth of deduction.